Stop scrolling, put down the coffee cup, and whatever you do, do not touch that sell button. Because what you are about to witness is not market dynamics. This is not economics. This is not even investing. This is armed robbery in a three-piece suit. This is a coordinated financial assault designed with surgical precision to separate you from the only assets that can protect you from what is coming. Welcome to the endgame, ladies and gentlemen. If you woke up this morning and looked at your portfolio, you probably felt your stomach drop into your shoes. You saw carnage. You saw devastation. You saw numbers that should not exist in a rational market. Gold has been obliterated, smashed down 13% now, lurching around $4,700. But silver has been taken behind the barn and shot in the head. It is down 36%. 36, it is trading at roughly $83 an ounce. Just 72 hours ago, we were talking about triple-digit silver. We were discussing the beginning of a historic run. And now the financial media, the same talking heads who could not predict a sunrise if you gave them a calendar, are throwing a victory parade. CNBC is flashing headlines screaming, "The bubble has burst." The Wall Street Journal is running editorials with titles like "Cash is King again." And they have a new hero to worship. His name is Kevin Wersch. The narrative being force-fed into your brain right now is simple, seductive, and absolutely lethal to your financial survival. They want you to believe that this new appointment, this so-called hard money sheriff, means the party is over for precious metals. They want you to believe he's going to drain the swamp of easy money, restore discipline to the system, and make the dollar great again. They are telling you the adults have returned to the room and that clinging to barbarous relics like gold and silver makes you a financial caveman. This is propaganda. This is a psychological operation crafted to exploit your fear and confusion. Look at what just happened to the price. Does a 36% collapse in a single trading session look natural to you? Does it feel like millions of independent investors all woke up simultaneously, read a news alert about Kevin Wersch, and decided in unison to liquidate their life savings? Markets do not behave like this organically. Markets do not fall off cliffs unless someone pushes them. This was engineered. This was billions of dollars in paper contracts dumped onto the market during the exact window when resistance was lowest. They waited until Asian markets went dark. They waited until liquidity evaporated. And then they struck. They hammered the bid with relentless selling. They triggered a controlled avalanche. They specifically targeted the stop losses of every leverage trader on the planet. When the price crashed through $100, the automatic sell orders activated. Selling created more selling. When it hit $90, margin calls detonated across the system. And now with silver sitting at $83, they have manufactured exactly what they wanted: maximum terror. But you need to ask the most important question in finance. Who is on the other side of this trade? If millions of panicked retail investors are selling, somebody has to be buying. Is it other retail investors? No, they're hiding. Is it pension funds? No, they move too slowly. The buyers are the banks. The very institutions orchestrating this massacre are standing at the bottom with shopping carts scooping up everything you're dumping in fear. They are using the paper market to create an artificial discount so they can steal the physical metal. They are creating a mirage of worthlessness, so you will hand them the most valuable asset on earth for nothing. They cannot simply buy your silver at fair value because you would never sell, so they have to terrify you first. They have to make you believe the world has fundamentally changed. They have to make you believe that holding metal is financial suicide and that cash is your salvation. Do not believe it. This crash is not reflecting reality. It is reflecting the derivatives casino. It is reflecting a paper abstraction designed to hide a physical emergency. While your screen screams $83, try walking into a coin shop today and buying a monster box of American Eagles at that price. Go ahead, try. You will discover the spot price and the street price are no longer speaking to each other. You will find the dealers either sold out or charging premiums that expose the lie. You will learn that the disconnect between the digital hallucination and tangible reality has never been wider. The trap has been set. The jaws are closing. And if you step into it, if you trade your silver for paper dollars today, you will spend the rest of your life regretting this moment. We need to dissect how they weaponize derivatives to fake this collapse. We need to examine the crime scene. Let me show you the murder weapon. This was not random chaos. This was a precision strike. To understand what just happened, you have to understand the tool they used to demolish the market. That tool is called the futures contract. A futures contract is not a bar of metal sitting in a vault. It is a promise. It is a piece of paper that says, I agree to buy or sell this asset at a specific price on a future date. But here's the dark secret that underpins the entire manipulation. You do not need to own a single ounce of silver to sell a silver futures contract. You only need margin. You only need a small percentage of cash as collateral. If you are a designated market maker, if you're one of the big bullion banks, You can generate these contracts from thin air. You can create infinite paper representations of a finite physical resource. So let me walk you through exactly what they did early this morning while you were asleep. They waited for the precise moment when the physical markets in Asia had closed for the day, but before the European dealers had fully ramped up operations. They exploited the liquidity vacuum and then they unleashed hell. They did not sell actual bars of metal. They dumped thousands of paper contracts onto the exchange in a matter of seconds. They flooded the order book with sell orders. The trading algorithms detected this tsunami of supply and interpreted it as genuine market sentiment. The computers concluded everyone is selling, so the price must be too high. The price began to fall. It dropped from 120 to 110. And this is the exact moment the trap snapped shut on the retail investor. You see, most people trading silver have stop-loss orders in place. These are automatic instructions sitting in the system that say, if the price falls to this level, sell everything immediately to protect me from further losses. When the banks smashed the price down to $100, they triggered your stop-loss. Your own protective mechanism turned into a weapon against you. Your computer automatically sold your position. This forced the price down to 95, which triggered the next wave of stop losses, which pushed the price to 90. It became a cascading liquidation event. It was a domino chain reaction. The banks did not have to sell all the way down. They only had to tip the first domino. Your fear did the rest. They weaponized your own risk management against you, and here is where the true genius of this heist reveals itself. While the paper price is in free fall, while your screen is flashing $83 in blood red, what are the banks actually doing? Are they continuing to sell? No, they are buying. They are standing at the bottom of the waterfall with buckets. They deliberately triggered your stop loss so they could purchase your contracts at basement prices and cover their own short positions. They forced you to sell low so they could acquire your claims to the metal at a massive discount. They cleared their liabilities. They erased their exposure. And most critically, they severed the connection between the paper price and the physical reality. Because while the screen claims silver crashed 36%, the actual metal did not change. The mines did not suddenly produce twice as much silver overnight. The industrial fabricators did not stop consuming it. The physical shortage we have been tracking, the empty vaults, the stressed supply chains, all of that remains completely true. Nothing changed in the real world. Only the paper fantasy changed. And they are gambling everything on the assumption that you are too frightened or too ignorant to understand the difference. They are betting you will look at that $83 price and believe your silver has become worthless. But the most dangerous element of this operation is not the price destruction itself. It is the cover story. They cannot simply announce we manipulated the market. They need a plausible narrative. They need a reason you will accept. So they are using politics. They are using the Kevin Warsh appointment. They are telling you this man is the new Paul Volcker. They are claiming he will squeeze inflation out of the system and restore strength to the dollar. We need to discuss why this story is a complete fabrication. We need to expose the $38 trillion trap that makes hard money policies mathematically impossible. Let me show you the numbers they are desperately hoping you will not calculate. The paper crash is just the mechanism. To understand why they are executing this attack right now, you have to understand the lie they are selling alongside it. They need you to believe in a fairy tale. They need you to believe the newly anointed Kevin Warsh possesses a magic wand that will drain liquidity, crush inflation, and restore the glory of the United States dollar without detonating the entire financial system. This is the Volcker myth repackaged for a new generation. And it is the most lethal delusion in modern finance. Let me give you the historical context they are abusing. In 1980, Paul Volcker raised interest rates to 20% to strangle inflation. It was brutal. It was painful. But it worked. Inflation was defeated. The dollar regained credibility. But here's what they are not telling you. Here's the inconvenient truth that destroys the entire narrative. In 1980, the United States debt to GDP ratio was 30%. Today, it is over 120%. In 1980, the total national debt was less than $1 trillion. Today, it is metastasized to over $38 trillion. Do you see the problem? You cannot run the Volcker playbook when you're drowning in an ocean of unpayable debt. It is not just difficult, it is arithmetically impossible. Here's the debt trap the financial media refuses to explain. If Kevin Warsh actually implements what he claims, if he genuinely keeps interest rates elevated and drains liquidity to defend the dollar, he will bankrupt the United States government within 6 months. The reason is interest payments. When you're carrying $38 trillion in debt, every single percentage point increase in interest rates adds approximately $380 billion to your annual deficit. If rates remain at 5% or climb higher, the interest expense alone will consume the entirety of federal tax revenue. The government will have to borrow additional money just to pay the interest on the money it already borrowed. This is a death spiral. This is a Ponzi scheme in its terminal stage. And Kevin Wars knows this. He is not stupid. He understands mathematics. So why is he talking tough? Why is he allowing the markets to crash? Because it is theater. It is a bluff. He is deliberately engineering a deflationary shock. He is intentionally smashing asset prices to create the illusion of discipline. He wants you to see gold, silver, and stocks collapsing. He wants you to feel fear. Why? Because he is setting the stage for the inevitable pivot. He is creating the crisis that will justify the solution. Think about the mechanics of what is happening. He drives asset prices into the ground, he creates a deflationary scare, and then when something critical breaks, when the repo market seizes up or a treasury auction fails because liquidity has evaporated, he will suddenly reverse course. He will declare a state of emergency. He will announce that deflation is now the threat and that the Federal Reserve must act boldly to prevent the depression. And then the money printers will roar back to life at a scale that will make the previous interventions look like a warm-up exercise. This crash is not the end of inflation. It is the compression phase before the explosion. Imagine a coiled spring. To launch it into the stratosphere, you first have to push it down. You have to compress it. They're compressing the price of gold and silver right now using the Wursch narrative as cover. They are driving the price down to 4,700 on gold and 83 on silver. But the moment the system cracks, the moment the bond market rebels and the printers restart, that spring will release. And it will release with the accumulated force of $38 trillion of unpayable obligations behind it. So when you hear cash is king, translate that phrase properly. It means cash is king for approximately the next 15 minutes. It means cash is king until the Treasury Department realizes it cannot make payroll and then cash transforms into confetti. Then we transition from deflation to currency destruction overnight. The current plunge in precious metals prices is the market fundamentally mispricing the timeline of this pivot. The market believes wars will succeed in tightening. The mathematics prove he must fail, and when he fails, he will fail in the inflationary direction. He will be forced to print more currency than any central banker in human history just to keep the lights on. This brings us to the critical question. If the insiders understand this, if the people with access to the real data know the deflation story is temporary, then where is the money actually going? You look at your screen and see 12 trillion in market capitalization supposedly evaporating from the precious metal sector. You assume capital is fleeing. You assume people are selling gold to buy dollars. You are wrong. The money is not leaving. It is transforming. It is migrating from paper claims that are collapsing into physical possession that is vanishing. We need to discuss Gresham's law. We need to show you exactly who is accumulating while you are capitulating. Let me follow the money. We arrive at the question burning through the internet today. Everyone is staring at the market capitalization of gold and silver. They are watching the percentages bleed red and they're asking, where did $12 trillion go? I'm here to tell you that is the wrong question. Money does not evaporate into nothingness. Wealth does not disappear, it simply changes ownership. The $12 trillion was not destroyed, it was transferred. It was stolen from weak hands and delivered into strong hands in the largest wealth redistribution event of the decade. You need to visualize the flow of capital happening right now. On one side of the transaction, you have the retail investor. This is the person who bought shares of SLV last week after watching a video about a silver shortage. He is holding paper exposure. He wakes up this morning and checks his phone. He sees silver down 36%. He sees terrifying headlines about Kevin Wursch implementing hard money discipline. He panics. He thinks, I'm losing everything. Cash must be safer. So he hits the sell button. He liquidates his paper position. He accepts the loss. He converts back into United States dollars. He is effectively trading a 5,000-year store of value for a fiat currency being debased in real time. All because a chart painted a scary picture for 6 hours. Now observe the other side of the river. Who is standing there with open arms? The institutional players, the central banks, the insiders. They are not watching the chart. They are evaluating the underlying value. They see the paper price has been demolished to $83. But they understand the physical fundamentals have not changed whatsoever. So when the retail investor sells his paper contract in terror, the institution buys it, but the institution does not hold the paper. The institution immediately exercises its right and demands physical delivery. They use the paper contract as a ticket to drain metal from the vaults. They are exploiting your panic to subsidize their accumulation. You are selling them insurance on a house that is already on fire for pennies on the dollar. They are buying it with a smile. This is Gresham's law in motion. The economic principle states that bad money drives out good money from circulation. Historically, this meant if you possessed a debased coin and a pure gold coin, you would spend the debased one and hoard the gold. But in this context, it reveals something far more sinister. The bad money, meaning the United States dollar and paper derivatives, is being weaponized to assault the price. But this assault is causing the good money, meaning physical metal, to disappear from availability. Think about the logic. If the screen price says $83, but you know your silver is genuinely worth $150, are you going to sell? Absolutely not. You are going to remove it from the market. You're going to store it privately. The mining companies will withhold production. The refiners will delay sales. The dealers will lock their inventory. The lower the paper price falls, the less physical metal becomes available for purchase. The crash does not create abundance. It manufactures scarcity. So while the television networks are screaming about a massive sell-off, the reality in the physical logistics network is a quiet run on the banks. We are receiving reports of enormous physical withdrawals from the exchange depositories. Metal is migrating from the registered category, which means available for delivery, into the eligible category, which means privately held storage, or worse, it is leaving the official system entirely. It is moving into shadow vaults. These are private secure storage facilities in Switzerland, Singapore, and the Cayman Islands that do not publish inventory reports. Once metal enters these locations, it is gone. It is off the grid. It effectively vanishes from the calculable global supply. This is the ultimate irony of the cash is king operation. By crashing the price to create the illusion of dollar strength, they are actually accelerating the death of the dollar system. They are enabling the smart money to drain the physical collateral at a 30% discount. They're emptying the vaults to paint a temporary picture of deflation, but once those vaults are empty, once the flow of physical metal stops because nobody will sell at $83, the game terminates. The price does not gradually rise, it snaps violently, so do not be the fool at the poker table. Do not let them frighten you out of your position. The $12 trillion did not vanish into the ether. It was transferred into the accounts of the people who engineered this crash. And if you want to join the winning side instead of being the victim, you have to ignore what they say and watch what they do. You have to disregard the paper price and examine the physical reality. And the physical reality is that at $83, silver is unobtainium. It does not exist at that price. Try to acquire it. I challenge you. Let me take you on a field trip. Let me show you what happens when cash tries to be king in the real world. I have a challenge for you right now. I want you to pause this video, I want you to open your phone, and I want you to attempt to purchase 1 ounce of physical silver for $83. The screen says that is the current price. Correct. The CME Group agrees. The Wall Street Journal confirms it. CNBC is broadcasting it. So logically, you should be able to exchange 83 paper dollars for 1 ounce of metal. But when you call your local coin dealer, if he even answers the phone, he is going to respond in one of two ways. Option A, we are completely sold out. Option B, sure, I have inventory, but the price is not $83. The price is $120. Welcome to the world of unobtainium. This is the moment where the spot price and the street price get divorced. They are no longer living in the same reality. They are not even communicating. The spot price, that $83 flashing on your screen, represents the price of a paper contract that settles in cash. It is the price of a promise. The street price, the $120, is the price of physical reality, and reality is demanding a massive premium. Think about what that premium actually represents. When a dealer charges you $40 over spot to sell you a silver coin, he is not ripping you off. He's telling you the truth. He's communicating that the paper market is broken. He is signaling that the cost to replace his inventory, the actual expense of prying physical metal away from refiners and mints, has not decreased. In fact, it has increased because at $83, the mining operations are shutting down production. No mining company in its right mind will blast rock out of the ground, crush it, process it with chemicals, and refine it just to sell the final product at a loss because some algorithm in New York had a temper tantrum. They are withholding supply. They are placing the metal into storage and waiting. You want it for $83. Go dig it yourself. So, we are witnessing a supply freeze. The mines are not selling, the refiners are not selling, the wholesalers are not selling. And yet, the paper market insists the price has collapsed. This is a mass hallucination. It is a phantom price. It is like walking into a Ferrari dealership and seeing a banner that says, all Ferraris $10,000. You sprint inside with your checkbook ready, and the salesman tells you, oh, we do not actually have any cars available, but we can sell you a photograph of a Ferrari for $10,000. That is what SLV represents right now. It is a picture of silver, and the people selling it to you understand they will never have to deliver the actual vehicle. This proves beyond any doubt that the crash is synthetic. If this were a genuine bear market, if the world truly no longer wanted silver, dealers would be flooded with inventory. People would be lining up around the block to sell their family heirlooms just to get cash. The premiums would collapse. You would be able to buy below spot. But the exact opposite is occurring. The phones are ringing constantly with buyers. The buy the dip crowd is out in force and they are colliding headfirst with a supply wall. The result is the physical market has effectively frozen. You cannot acquire volume at this price. If you attempted to place an order for $1 million worth of physical silver today at $83 per ounce, you would crash the dealer's website. The order would be rejected because the metal is not there. This is the fatal flaw in the cash is king narrative. Cash is only king if it can actually purchase things. If you're holding $1 million in currency, but you cannot convert it into the asset you need because the market has seized up, then your cash is worthless. You're holding a coupon that expired, and this is precisely where the trap slams shut on the retail investor. They sell their paper silver today because they are terrified of the $83 number. They receive cash. Then next week, when they realize the crash was artificial, they attempt to repurchase their silver. But now the premiums have expanded even further, or worse, the price has already snapped back to $150. They sold low, they cannot buy back. They are permanently priced out. They have been washed out of the only asset capable of protecting them from the approaching debt spiral. So when you stare at that screen, understand you are looking at a ghost. The $83 silver does not exist in physical form. It is a number generated by a computer to manipulate your emotions. Do not fear the ghost, fear the empty vault. Fear the day approaching rapidly when the paper market finally admits defeat and declares force majeure because it has no metal remaining to deliver. On that day, the price will not simply increase. It will go no offer. It will become priceless. We need to close this argument. We need to deliver the final verdict on what you should do with your wealth in the face of this 12 trillion lie. We need to explain why holding your ground today is the most critical financial decision you will make for your children and grandchildren. Let me give you the bottom line. Here is the verdict. We have watched them incinerate $12 trillion of paper wealth in a single morning. We have watched them deploy the Kevin Wersch narrative to convince the world that cash has reclaimed its throne. We have watched them demolish the screen price of silver to $83, a number completely disconnected from physical reality. And we have seen the truth. The physical metal has vanished into the shadow vaults of the very institutions telling you to sell. The conclusion is unavoidable. This is not a market crash. This is a liquidation sale exclusively for the elites. They have deliberately manufactured panic to shake weak hands out of the market one final time before the endgame. They want your gold. They want your silver. And they're willing to destroy the paper price to acquire it. You are standing at a fork in the road. Path A, you believe the lie. You sell your hard assets. You take the cash, and what do you receive? You receive a currency backed by $38 trillion of unpayable debt. You receive a currency guaranteed to lose 15% of its purchasing power every single year, even if Kevin Wersch pretends to implement discipline. You receive a ticket to board the Titanic right after it struck the iceberg. Path B, you see through the trap, you hold the line. You understand that a 5,000-year store of value does not become worthless because a computer algorithm painted a red candle for 6 hours. You recognize that price is what you pay, but value is what you get. And at $83, they are practically handing you the only asset capable of surviving the coming monetary reset. This crash is a gift wrapped in terror. Do not waste it. If you can locate physical metal, if you can find a dealer who still has inventory, buy it. Take their subsidized silver. Trade their fake dying paper for real eternal atoms. Drain every last ounce from their system until the unobtainium becomes unobtainium for them as well. The paper market is in its death throes. It is convulsing, but the physical market is eternal. This manipulation will fail because at the end of the day, they can print infinite dollars, but they cannot print a single ounce of silver. They cannot print gold. They cannot print trust. Do not let them steal your future. Do not let them frighten you out of your legacy. The 12 trillion is gone from the screens, but the wealth still exists for those courageous enough to hold it. This is Asian Guy. The price is fake. The war is real. Do not sell. Stack harder.